Angel One now, as the fourth quarter was a weak one for the company, a sequential decline across the board, across all parameters. The management also told CNBC TV18 earlier that FY26 will be a year of consolidation. Now, Mangalam, you will tell us more on our special segment, Insight Edge, as to what were some of the key takeaways that you had with the management.
Well, the reason why the stock has moved higher is because now the management, by virtue of its conversation on CNBC TV18 and in the conference call as well, did indicate that the worst was definitely behind the capital market players. Why do they say that? Because one, it was a perfect storm. There was a fair amount of volatility in the stock market. There were also a lot of regulatory changes, which now the street believes that is gone and done with. There are signs of recovery. The impact of regulatory changes have been absorbed by retail investors. The revenue curve is moving up slowly. They said February was the trough. Thereafter, there was some recovery in March, and that continues into April as well. And this revenue increase will contribute directly to margin improvement. There were a couple of one-offs in the fourth quarter as well. If you take note of that, going forward, margins are likely to improve. They saw 6 to 7% month-on-month growth in F&O orders in the last 2 months as well. F&O was largely hit by the regulatory segment. And they say that while FY26 will be a year of consolidation, some of their products like wealth doing well, seasonal market share changes that they saw in the commodities and F&O business as well. And they said that they are able to bounce back to their 44 to 45% operating margin guidance by the fourth quarter of FY26 itself. So were that to happen, then maybe a lot of the estimates that the street was making of a large single-digit decline in EPS for FY26 may not come by, because if the margins are improving, even if the revenue stays stable and the worst is behind, then maybe the performance would be slightly better than what the street is fearing. Add to all of this, the stock is in F&O ban. So no fresh positions can be taken to be carried overnight. Though, can the stock get out of F&O ban or not? For that, you'll have to take that break, come back, talk about the F&O segment, and that's when I tell you whether Angel One comes out of F&O ban or not. But as of now, from a business standpoint, the management says perhaps the worst is behind. So let's listen in to what Dinesh Thakkar, who's the CMD of the company, who had to say about the business.
Macros, be it our economic growth, be it FIS not investing, and majority impact is because of regulatory changes, which has now, I would say, absorbed by retail investors. We saw a bottom in terms of number of orders in Feb. We did almost below 50 lakh order per day, which is kind of like minimum. After that, we are seeing slowly kind of like revenue curve is moving up. So March numbers were better in terms of 53, 54 lakh order per day. And we are seeing this trend continuing in the like this month also. So that gives me confidence that, okay, at least revenues are now, revenue come has turned for better. So whatever revenue increment we see in this progressive months, that will straight away contribute to our expansion of margin. Whatever impact we have seen in terms of F&O order, on month basis, I am seeing a growth of around 6 to 7% now for this past 2 months. So that gives a broad sense that, okay, retail are coming back. See, for retail, there was no reason for them to come back because markets were depressed. They did not see any opportunity, and they were not in a hurry to really jump and decide that what kind of an instrument they had to buy, if at all not options. So what I am saying, after this kind of like stabilization in terms of our kind of like news that are coming and the FIS inflows that are coming in, it appears that retail is getting back confidence to come back to the market. FY26 this year would be a year of consolidation where we would be focusing more on getting back to OPM, and the growth is going to help. So currently we are not working on what kind of top line we will achieve because it's a function of market condition, lots of things. Internally, what we can do is that, okay, how do we bring in AI tool, get more cost efficiency, and how do we bring in more customer on our platform? So result of that, whatever revenue we are going to get, it is very difficult to predict at this point in time. But what we are confident is that we would be able to bounce back to an OPM of 40-45% by Q4 FY26.
Well, the worst is over is what Dinesh Thakkar of Angel One says, and it's showing up on the stock as well. 6% higher now for the stock at the highest point of the day is Angel One, but of course significantly away from its all-time high, which is close to around 4,000 rupees. We take a short break. The Nifty